This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Late day sell-off. Markets reverse course on concerns coming out of the Middle East.
Blockbuster deal. Amgen, the world's biggest biotech firm, jumps feet first into one of the industry's fastest growing markets, cancer drugs. It's paying $10 billion for Onyx Pharmaceuticals. Is this the beginning of a biotech merger wave?
And generations of debt. Why a growing number of parents over 50 are struggling to pay off not only their own college loans, but also their children's. All that and more tonight on Nightly Business Report for Monday, August 26th.
Good evening, everybody. I'm Bill Griffith in for Tyler Matheson alongside, of course, Susie Garrett. Concerns about what U.S. Secretary of State John Kerry called undeniable evidence of a chemical weapons attack in a rebel-controlled area of Syria and what role the U.S. military might play in response sent the markets lower in the final hour of trade today. Here's what Secretary of State Kerry said during a news conference in Washington this afternoon in a clear warning to Syrian President Bashar al-Assad.
President Obama has made clear to the Assad regime that this international norm cannot be violated without consequences. And there is a reason why, no matter what you believe about Syria, all peoples and all nations who believe in the cause of our common humanity must stand up to assure that there is accountability for the use of chemical weapons so that it never happens again.
The market had been trading higher earlier on merger news, and in spite of a sharp drop in July durable goods orders, but those comments by Secretary Kerry sent the indices lower, and they did close at the lows of the session. The Dow fell by 64 points, ending below 15,000 again. The Nasdaq was a fraction of a point lower. The S&P was down 6 points. Gold, the other way, up to above $1,400 an ounce for the first time since June 7th, when it hit that multi-year low of $1,180.
Well, the biggest of the merger news that Bill just mentioned, one of the largest deals ever in the drug-making industry. Amgen, the huge biotech company, is paying $10.5 billion for Onyx Pharmaceuticals. When completed, the deal will give Amgen 2 new cancer drugs, adding to its own cancer-fighting medications and current bestsellers fighting osteoporosis, rheumatoid arthritis, skin disorders, and more. So what does all this mean? Seema Modi has the story.
The world's biggest biotech company finally has its foothold in the cancer drug market. Over the weekend, Onyx Pharmaceuticals accepted a $10.4 billion offer from Amgen after rejecting a lower offer at the end of June. Onyx is seen as a leader in cancer treatments, and the deal gives Amgen access to one of the fastest growing markets in the pharmaceutical space. The driver of the deal? Onyx's crown jewel, Kyprolis, a treatment for a rare type of cancer that could see sales of $2 billion over the next several years.
This gives them an entrance into the myeloma market, which is growing very significantly with Kyprolis. Onyx has other oncology drugs.
If approved, the buyout values Onyx at $125 a share, which had been trading at $86 before news of the deal first broke in June. And while long-term holders of Onyx will make money, investors that bought the stock after the company rejected Amgen's first offer won't be quite as happy. After Onyx shot down that deal, its shares spiked. Wall Street expected the company could sell for as much as $135 a share. Today's deal doesn't quite match those expectations, and that's reflected in Onyx's one-month performance. Shares are down about 6% since then, though they're still up big on the year. Today's deal ranks among the 5 biggest ever by a biotech and is the second largest takeover for Amgen. And in an industry where taking over a proven drug is often seen as a shortcut to profitability, many analysts think we could see more big deals in the works soon.
The focal areas kind of in the rare diseases and in oncology, company like BioMarin, Celldex. There have been rumors that Roche is going to make a bid for Alexion. So there are a whole raft of companies out there that the market is speculating may be next.
For Nightly Business Report, I'm Seema Modi in New York.
Well, that Amgen Onyx deal was not the only big merger announced today. You also had British drug maker AstraZeneca bolstering its pipeline of new cancer drugs as well, agreeing to acquire privately held U.S. biotech company Amplimmune for $500 million. Also, oil and gas producer Anadarko Petroleum is selling part of its stake in a natural gas site off the shores of Mozambique for $2.6 billion to an Indian energy company. And Pittsburgh's TMS International, which provides services and materials to steel mills, announced that it is selling itself to the Pritzker family, of course, the founders of the Hyatt hotel chain and other industrial businesses. That is a cash deal worth more than $1 billion. So when all was said and done, shares of AstraZeneca were slightly lower, shares of Anadarko were higher, and shares of TMS shot up by more than 12%.
Now, one more merger that we first told you about that was in the works on Friday was confirmed today. Electronic stock exchange operator BATS Global Markets is buying rival Direct Edge. The deal will create the second largest U.S. stock exchange. The new BATS will trade more shares than the NASDAQ and will be second only to the New York Stock Exchange in terms of volume of trades. Terms of the deal not disclosed.
The U.S. government is going to reach its borrowing limit again, this time in the middle of October. Treasury Secretary Jacob Lew wrote to Congress today saying that the government will reach that debt limit of $16.7 trillion by mid-October, and he urged lawmakers to reach a federal budget deal sometime before then.
Some good news for drivers to tell you about. Gas prices are falling. The Lundberg survey shows prices at the pump are down 4 cents a gallon over the past 2 weeks, now averaging $3.56 a gallon. That's 20 cents lower than the same time last year.
And a new survey of economists says the biggest fiscal challenge facing our country may be years away from right now. The survey conducted by the National Association of Business Economics finds that nearly half the experts surveyed cited budget gaps expected in the 2020s and the 2030s as the top financial problem, compared with 37% who said that projected deficits over the next 10 years are more of a concern.
Another possible challenge to the economy, fears about a slowdown in the housing recovery. During the worst of the foreclosure crisis, investors, many of them big money hedge funds, swooped in to buy up thousands of properties, which pushed prices higher than anyone expected. That helped jumpstart the housing turnaround. But now there are signs that those same investors may be pulling back. Diana Olick explains what that may mean for the housing market.
To a rehab division.
When we visited Atlanta-based The American Home earlier this year, CEO Aaron Edelheit was buying and rehabbing foreclosures at a fast clip.
We own 2,500 homes in Atlanta, Charlotte, Nashville, Orlando, and Tampa.
Today, he says he's still buying, but he admits some investors are pulling back, undergoing a digestion period after exponential growth.
That means maybe a slowdown in how many homes they acquire. That may mean letting go some employees in areas that it doesn't make sense, or maybe you grew too fast. But it's really institutions starting to prove or work towards profitability to show Wall Street.
Investors made up just 16% of home buyers in July, according to the realtors. That's down from 22% in February and 25% in early 2009. In some of the hardest hit markets, investors made up more than half of the buyers during the worst of the foreclosure crisis. Now they're finding less to buy, and what there is more expensive.
We definitely see the investor market cooling. So on one hand, you had Wall Street early in the season buying as many homes as they possibly could, and then at some point becoming frustrated because you just couldn't buy in bulk the kinds of inventory they'd been able to get in 2012 and 2011. And so those investors started to pull back.
Last spring, Redfin was running seminars for small investors, and Kelman says the classes were packed. It's all anyone was talking about at cocktail parties. As home prices were rising again, people were pulling money out of their 401ks to buy properties. Now, not so much.
The volatility that was once the private domain of Wall Street has come to Main Street, and that has created all sorts of risk both for investors and for lenders, as well as regular American home buyers.
It was inevitable, as housing is now yet another tradable asset class, much like mortgages were a decade ago. For Nightly Business Report, I'm Diana Olick in Washington.
And while the real estate market may be showing signs of cooling, hot and dry weather is prompting big movements higher for some grain futures. Soybean prices, for example, hit an 11-month high today, with corn touching a more modest 1-month high, and wheat futures hit a 3-week high as hot and dry weather is threatening to cut output in the nation's Midwest.
Hot and dry weather has also contributed to the rash of wildfires striking the West. But there was some improvement today in the massive fire burning in and around Yosemite National Park. A fire so severe it's threatening the water and power systems in San Francisco that are some 200 miles away. Scott Cohn joins us now from the edge of that wildfire in Tuolumne City, California. Over to you, Scott.
Thank you, Susie. It is relatively quiet here now, but a subtle shift in the wind, and this community and many others like it on the edge of Yosemite would actually be literally and directly in the line of fire. That explains why there's a very large firefighting presence here, but protecting Tuolumne City is just one of the many tasks at hand. The fire has burned an area larger than the city of Chicago and growing. Tree by tree, branch by branch, they're attacking it on the ground and from the air. Progress is slow and the fire is maddeningly unpredictable.
One of the big challenges when you have a fire this size is the fire itself is going to actually start making its own weather. So we've seen significant downdraft winds, very erratic winds going in all directions.
This is the largest of a dozen fires burning just in California, a strain on the state's limited resources, and fire season isn't over yet.
This is August. What's going to happen in September in terms of fires, we don't know.
California has already spent a quarter of its firefighting budget for the year. The federal government will help, but fires burning in 11 states are straining those resources too. $1 billion spent and counting. With more and more development in areas prone to fire, the strain isn't likely to ease anytime soon. In Tuolumne, normally a sleepy town on the edge of Yosemite, fire crews are going door to door, clearing out combustibles in case the initial defenses don't hold.
We have engines spaced out in this area, and that's one of the things we look for if a fire is coming is spot fires, and we deal with those first.
The town is also a base camp for some 3,000 firefighters on the front lines, including Jordan Fries's dad.
I'm worried about him all the time.
Here on the edge of the inferno, they're living on the edge. It's one of the worst fires in California history. And the situation with San Francisco, which is very far from here, of course, the city is not directly affected by the fire, but the Hetch Hetchy Reservoir in Yosemite supplies much of San Francisco's water supply and the hydroelectric power for the city. Some of the power resources have been damaged somewhat. So far, though, no interruptions, but Governor Jerry Brown has declared a state of emergency. Bill?
Scott Cohn, thank you. Yes, as Governor Brown pointed out, it's not even what we call fire season in California. That doesn't come till the fall. Thank you, Scott. Still to come, first there was Microsoft, which saw its stock pop after it announced the CEO would be leaving. So which chief executives may be the next to go and see their shares rise when they do? We'll get to that coming up. But first, a look at how the international markets closed today.
The ongoing battle between CBS and Time Warner Cable is now entering its 4th week, with little apparent progress on settling the dispute and returning service to millions of customers in some of the nation's biggest cities. Now, with the U.S. Tennis Open starting today, college football games kicking off this weekend, and then the NFL the following weekend, are the two sides any closer to an agreement? And which side will cave first? Julia Borston has the latest.
24 days and counting.
Time Warner Cable has dropped CBS.
That's how long 3 million Time Warner Cable subscribers have been enduring a CBS blackout, thanks to a dispute between the two companies over fees. To keep customers from canceling their subscriptions, Time Warner Cable is offering a range of free perks, giving away the Tennis Channel, temporary access to Starz Kids and Family Channel, Amazon gift cards to watch Under the Dome and other shows on demand, even indoor antennas. The cable giant is ramping up its offerings as the upcoming fall TV season, and hits including How I Met Your Mother and The Big Bang Theory give CBS growing leverage.
You have no idea how annoying this is.
We think CBS is in the catbird seat here, and we think they have the upper hand in these negotiations.
Well, the NFL season doesn't start for about another 2 weeks, and CBS's fall TV season doesn't start for 2 weeks after that. The pressure is on for the two companies to strike a deal before this weekend, when college football starts.
Viewership for SEC football is triple that of other comparable conferences. If this deal is not done by this weekend, Time Warner Cable is probably looking at further share losses in its subscribership.
Miller predicts the two companies will strike a deal by this weekend. He warns if Time Warner Cable can't get CBS back on the air by the start of the NFL season, the cable giant will start to bleed subscribers. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Elsewhere, Tyson was the worst performing stock in the S&P 500, and that's where we begin tonight's market focus. The shares of the meat processor came under pressure after a Wall Street analyst cut his rating on the stock to neutral from buy, citing a steep increase in production among its competitors. The stock dropped 7% today to close at $29.17. Meanwhile, Big Lots Stores gets an upgrade from J.P. Morgan. That sent shares higher. That analyst now rates that stock as a neutral, citing new leadership, a new look, and a new strategy at the company. According to the analyst, Big Lots is refocusing on its core operations and trying out new programs like furniture leasing. That stock rose more than 5%. It closed at $34.02. And another upgrade moving two stocks in the 3D printing business. Citi put a buy rating on 3D Systems and Stratasys, saying that the 3D printing market will more than triple over the next 5 years. According to that analyst, 3D Systems is best positioned to capitalize on potential market opportunities. He has a $60 target on that stock. 3D Systems gained more than 7%. It's at $51.90. Stratasys rose 4% to close at $110 a share.
Tesla is reaching new milestones. Its Model S car is among the top 5 selling luxury and sports cars in California. According to the California New Car Dealers Association, Tesla is outselling Porsche, Volvo, and Land Rover in that state. Tesla shares rose more than 1% today, hitting a new all-time high, $164.22. And for the year, the stock is up more than 400%. And shares of Sotheby's rising after activist investor Daniel Loeb of Third Point raised his stake in the company. Loeb, who disclosed a 5.7% stake in the auctioneer, said he plans to engage in a dialogue with the board. In a statement, Sotheby's said the board and management teams are committed to building long-lasting value for all shareholders. The stock rose almost 3% to $47.21. And another high-profile activist investor is getting out of JCPenney. Bill Ackman, JCPenney's largest shareholder, who argued publicly with the retailer's board, will sell his entire stake in the company. It's roughly 39 million shares. The news came out after the market closed, sending the stock lower. In the regular session, though, JCPenney fell 1% to $13.35.
Well, Microsoft shares may have slipped today, but they are still up 5.5% since news broke Friday that Steve Ballmer would step down as CEO. That news has investors wondering what other stocks might rally if the CEO unexpectedly left the company. Joining us now to explore that is J.P. Eggers, who's professor of management at New York University's Stern School of Business. Thanks for joining us, Professor.
Absolutely happy to be here.
Is it as simple as saying that that shareholders lose their thoughts about a management team and they're happy when they're leaving? Is that why a stock rises? They lose confidence?
Well, I mean, certainly when investors are lacking in confidence in a CEO and that CEO leaves, there's going to be a bump in the stock price. When we think about what some of the major reasons why you would see a big bump like Microsoft, there's often the sense that there's a big amount of value in the organization, whether it be cash or cash flows from things like Windows and the Office suite. And there's a concern that the CEO is going to waste that money, going to spend it frivolously, trying to chase down some new opportunity. And so when that cash and that treasure is kind of protected, the investor is certainly going to react very positively to that kind of a change.
So do companies like, let's say, Dell or Apple fit that description, so that if Michael Dell suddenly said that I'm stepping down, or Tim Cook at Apple said the same thing, would those stocks pop on the news?
Well, I mean, Dell at this point in time, we've already kind of seen Icahn push the stock with his investment. I think certainly 6 months ago it would have fit that bill, maybe less so now. Apple, I don't know. Maybe we're getting to that territory. People are getting concerned enough that Cook might misspend that money and mislead the company on innovation.
What about on the other side, though? What about companies where if the CEO were to decide to leave, the stock might drop, go the other direction? Maybe a Facebook with Mark Zuckerberg, or a Yahoo with Marissa Mayer, who's been so successful in the last year.
Absolutely. There was certainly, if there was a turnover event like that, especially if the market was uncertain why the CEO is leaving, they might read very negative things into that. And certainly, you know, Meyer at Yahoo's certainly seen the stock price bump in part because of investor reaction to her. And if you think about places like Amazon, certainly where there's a founder CEO who's kind of been the leader in innovation, that kind of turnover would be seen as very disruptive to the organization.
Professor Eggers, I want to ask you about JCPenney. You heard our report just a moment ago that Bill Ackman is pulling out his 39 million shares. Now, here's a company who's had so many issues and a revolving door of CEOs. But let's just say that Mike Ullman, who's the current CEO, is forced out or steps down or whatever. What happens there?
JCPenney would be a very interesting situation, because I think there's very clear sense that there's a leadership void, in a sense that there's no real clear direction for the firm. But given how many turnovers there have been, I mean, he's only kind of an interim CEO to some extent. But if he was kind of forced out before they actually had a clear successor in line, I think people would be very scared that was a clear sign of just dysfunctional management, even at the board level at that point.
Not to discredit our premise, but are we giving too much credit to a CEO and his or her impact on a company's bottom line long term?
Well, I mean, I think that the market will tend to do that a little bit, in the sense that the market will be drawn to celebrities, good or bad, at the CEO level. But the reality is the CEO, either directly or indirectly, has an enormous impact on the organization by choosing how to allocate resources, by deciding what the incentive structure is for the firm, by deciding the structure and reporting structure of the organization. So no, I think long term we're not really kind of overstating that from that perspective.
J.P. Eggers of NYU's Stern School of Business, thanks for joining us tonight.
Thanks for having me tonight.
You bet.
And coming up on the program, over 50 and weighed down by student loans. Why a growing number of parents find themselves struggling to pay off their kids' student loans, as well as their own loans from college. But first, here's a look at how commodities, treasuries, and currencies performed today. Total student loan debt in the U.S. has now topped $1 trillion. That's second only to mortgage debt. And now there's a growing number of older graduates who are not only struggling to pay off their own student loans, but they're grappling with new loans taken out by their children. Eamon Javers has the story.
So I was saying, Meet the Rose family, 2 generations struggling with student loan debt. Together, they owe $136,000. At 51, Charlene Rose hoped to put away money for retirement. Instead,
about 50% of my paycheck goes towards my student loan debt, and that's quite a bit.
Charlene is paying off her own $51,000 loan after getting a master's, and she and her husband, a disabled veteran, pay much of her children's college debts too. All are still in school. Ebony owes $27,000. Victoria, $23,000, $8,000 of which Mom Charlene took out on her behalf. Ricky owes $25,000 on loans and pays some of his tuition to help Mom.
I'm doing temp work just to have extra money coming in.
Charlene is part of a group of Americans 50 to 59 years old who owe $112 billion in student loans. That's more than triple that age group owed in 2005. We used to think of student loans as temporary, but for some American families, they're becoming a lifetime or even multi-generational burden.
We're looking at $1,400 a month.
Melissa Towle is a credit counselor who helps Charlene manage it all.
30% of my clients are in that bracket of 50 and older, either worrying about paying back their children's loans or paying back their loans. And a lot of them just say, I'm going to die before I pay this off.
Some say all that debt is still worth it.
The return on investment to higher education is about the greatest return an individual can secure. It is the best way to get a job, to keep a job, or to get a better job.
Her tuition is going to go up.
And Charlene says she has no regrets.
Whatever sacrifices, I have to make for them to go, I'm willing. And they're willing to. They're willing to help. So you just took me.
After all, a mother's love knows no bounds.
You're welcome. Have a great day.
For Nightly Business Report, I'm Eamon Javers in Washington.
And finally tonight, we honor the passing of one of Wall Street's true pioneers. Muriel Siebert, known to all of us as Mickey, was the first woman to own a seat on the New York Stock Exchange. She passed away over the weekend in New York City of complications from cancer. She bought the seat December of 1967 after months of struggling to break into the old boys world of equities trading. She went on to establish her own investment firm. She was also the first woman superintendent of banking for the state of New York back in the 1970s. Mickey was 80, just shy of her 81st birthday. She will be sorely missed, but never forgotten.
I served with her for many years on the Economic Club of New York board. She was a real positive force there, too. And you said a pioneer. She really was a trailblazer.
Small in size, but
Yes.
huge in stature. And she
That's so
loved
true.
helping the underdog on Wall Street, didn't she?
She really did. She will be missed.
Yep.
That's Nightly Business Report for tonight. I'm Susie Garrett. Thanks so much for watching.
I'm Bill Griffith. Have a great evening. We'll see you again tomorrow.
Nightly Business Report has been brought to you by sailing through the heart of historic cities and landscapes on a river. You get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with a Nightly Business Report news brief. Stocks kicked off the week in the red on concerns about the possible response by the U.S. and its allies to evidence of a chemical weapons attack in Syria, and after Secretary of State John Kerry called Syria's actions inexcusable. The Dow fell 64 points, the Nasdaq lost a fraction, the S&P was down 6 points. Biotech giant Amgen agreed to pay $10.5 billion for Onyx Pharmaceuticals and its cancer-fighting drugs. It's one of the largest deals ever in the drug industry. Another blow to J.C. Penney. Its largest shareholder is selling all of his 39 million shares in the struggling retailer. And the U.S. government will reach its debt limit in mid-October unless lawmakers reach a budget deal. Be sure to tune into Nightly Business Report right here on your public television station.